Let's say it's been a few weeks, maybe even months after the crash. Your vehicle has been repaired, and you want to know kind of here's some of the issues that you might want to be thinking about as you're transitioning after having your vehicle fixed. Was the vehicle fixed properly? Are there any complaints about the quality of the work? Is it operating properly? Those are things that you want to find out right away. Sometimes it may be necessary to take the car to another mechanic and get a second opinion. Um, Whether you can do anything about it is probably going to depend a little bit on who selected the repair shop for the vehicle. If you selected the repair shop, you're probably out of luck as it pertains to your insurance company, but obviously you would have a potential dispute with the repair shop. If the insurance company selected the repair shop and they do a poor job, don't fix it, whatever, you may have a better argument that your insurance company should make it right. But those are some of the things that can happen, but fortunately, they don't happen too often. Those are some of the incidental costs that even if they're not covered by your own insurance, you may be able to seek them later on if you hire an attorney and pursue a claim against the other driver and their insurance company. Those may be incidental costs that you can pursue as part of your claim when you eventually, hopefully, settle the case or get a jury verdict in your favor. I want to talk a little bit about what happens to vehicles that can't be repaired or it's too expensive to repair. The general measure of damages for property damage, that includes cars and trucks and motorcycles, is the lesser of either the fair market value at the time of the crash, not what you owed, not what you paid, but what was the fair market value at the time. So, like, let's say the Kelly Blue Book, um, or the cost to repair the vehicle, whichever is less. So if it costs more to repair the vehicle than it was actually worth, the insurance company is not going to pay more than the fair market value of the vehicle, and that would be considered a total loss. This is why it's important, especially when you have a vehicle that you bought recently and you're in the initial months and years of the loan. The vehicle can depreciate much quicker than your loan payments because you're paying a lot of interest at the beginning. That's where gap coverage becomes important. Gap coverage actually does cover that gap between what the fair market value of the vehicle is at the time of the crash and what the bank is owed. What you don't want to happen, if you can all help it, is have a vehicle that you have a loan on it. The bank or credit union has a security interest in it. Someone causes a crash, damages your vehicle, and the fair market value is less than what you still owe on it. Now you are a situation where you don't have your vehicle and you still owe money to your bank, and they're probably not going to give you a loan for another vehicle as long as you have an unpaid loan balance out there. So gap insurance is really, really important and useful. Um, you can usually either get that through the lender or sometimes through your auto insurance, but make sure you're not paying for it twice. So double check that just so that you have that protection, but that you're not paying for it twice.